something slightly different, not quite mining. So hopefully you'll be as interested. The company is called Safestay, and it was started by Larry Lipman. Larry Lipman has had a number of ventures in the stock market. Probably the most famous one is Safestay. And Safestay is a really interesting business with some parallels to Safestay. Larry bought it with just a few shops. At the time they had 5 stores. He bought it for something like £1 million. And in the space of 2 years, he added 22 stores. And by doing that, he ended up selling the business for £100 million. So these are kind of the parallels. We think there is the same opportunity in hostels, which is our business. We think there is exactly the same opportunity to go in the same journey, consolidate the market, a market that nobody seems to be paying very much attention to, and eventually by acquiring scale and through expansion, we think someone will come in and buy our business for a lot of money. One of the things, disclaimer, there you go. One of the things that we get asked in evenings like these is hostels. I understand hostels, but what do you really mean? What are you trying to do? We're trying to create a differentiated product. And actually, if you cast your mind back to 1995, before the advent of Travelodge in the UK, Premier Inn even more so, Ibis and all the budget chains, you had all the established hotel brands really not interested in the value segment of the hotel market. Eventually, the B&Bs got taken over, and there's still a large proportion of the market that is B&Bs. But the B&B market, or that segment, got occupied by Premier Inn as probably the biggest operator. And it's really interesting because Marriott were better positioned to go and get the place that is now Premier Inn's. Hilton, there were sufficiently established brands that could have gone on that journey. We think the same thing is happening with hostels. Nobody is really paying attention to hostels. It's an established business model. It's a lot more profitable than hotels. But for some reason, the large brands are not really venturing into it. And I think I'll go on to make the case that the right next value segment to invest in is going to be hostels. But hostels done properly, not the hostel as the halfway houses, compromise accommodation, but the vibrant millennial Generation Z oriented product. We've got 13 locations, 12 open. Paris is being fitted out. And we placed in 12 different locations, 7 different countries. We've got the property in Edinburgh, in the Royal Mile. In York, we're within the city wall. And this will go on to establish a trend. Wherever we're located, we're in prime real estate. And this is where Larry Lipman comes in with his property expertise. We're in London in 2 locations, Kensington and in Elephant and Castle. We're in Barcelona in Passeig de Gràcia. Passeig de Gràcia is the second most expensive commercial street in Europe right now. We're also in Gothic and Sea, and our property is right by the sea. So when you walk out from Barcelona Sea, you walk into the sand. One of our neighbors is the W Hotel. We've got a property in Paris. In Vienna, we're by the Opera. In Madrid, we're right by Fuencarral, which is, again, a great commercial street. We're in Lisbon, Prague, and Brussels. In Brussels, we're by Grand Place, for those of you that have been there. So location and the value of being in prime real estate is very important to us. What we're trying to create is a good merger between the cool, youth-oriented product. It should be interesting, it should be vibrant, it should be a little bit edgy. And our typical population, our typical guest are young people that are described as nomads. They work from their laptops. They don't really need to be in any physical location, and they can travel the world as they do their work. They're an important part of our customer base. And then the adventurers, which are really the backpackers. The other aspect of our business is groups, and I'll tell you a little bit more about that. We're trying to engender into this hostel market this idea of great service. So hostels they've always existed, but they weren't applying all the known facts of the hotel market. Great service, great quality, good furniture and fittings. And we're trying to generate that environment that should be relaxed when you want it to be relaxed, and it should be vibrant when you're expecting that to be so. So I mentioned Quality FF&E, that is really important. We're doing hostels, but we're doing it better. We're doing it with a different perspective. We create a stylish boutique kind of environment. Some of our bed stock, 10% more or less, is private rooms, so we compete with hotels in that space. But we're bringing into the hostel market things we've learned from well-established budget brands. Great quality sleep. If we can provide that in a hostel at an average price of £20, we become super competitive. There is something about hotel meets hostel in terms of quality, in terms of service, but it is very much a young product. When I say that, 12% of our guests are above the 34-year-old age group. And this is because people that start using hostels at a young age, they continue to use hostels. They're not afraid of what am I going to find here. They know that the market is evolving and they know that they're going to find quality offering in there. But largely, the majority of our guests are young people that travel usually 4 times a year. So millennials have a very cavalier attitude to money. They tend to take 4 holidays a year, and they tend to spend 50% of their income on leisure. So the market is ripe for the product we've got. I'm going to quickly take you through the team. So Larry's got quite a few successful ventures. Hercules is an important one, and BizSpace is probably a very a front runner to the meeting room space. And of course, Safeland, which is one of his existing AIM-listed companies, and finally Safestay. The Chief Finance Officer, we hunted him down from other businesses because he had a really interesting understanding of the investment market, and with an expansive business, it's all about adding properties for the portfolio. And his experience with our core in particular was very interesting to us. Hervé is here today, so if you get very technical on financial questions, I'm going to rope him in, and then maybe after the presentation you can catch up with him over drinks. I worked for Premier Inn for quite a long time. That's the relevant experience that eventually got me to join Safestay, and we're trying to replicate very much the same things. Automate what you can automate, be very guest-centric so you can develop a product that eventually becomes very attractive and differentiated in the market. Stephen Moss is, we've got a good selection of non-executive directors with a varied set of experiences. I won't get into too much detail, but they either have property expertise or operational expertise. And finally, Anson at the bottom is our biggest shareholder, and he's been adamant that he wants to retain his position. I think from memory he owns 20 or 29% position, he's 29% of the company. And every time we go and try to do a fundraise, or every time we try to expand, he wants to make sure that he retains his position. Because he sits in the board, that's a pretty interesting position to be in. It gives us great confidence that what he hears is music to his ears. So why hostels? Again, the same principles that Larry was chasing with SafeStore. The market is fragmented. There is no real brand presence, and it's absolutely ripe for someone to come in, give large scale to a group at a very fast pace, and then eventually sell it on to someone that has the capability to run a much bigger business. Probably a couple of years ago now, a group called The Generator got sold for 470 million. They had 12 properties at the time, and it was the biggest deal done in the hostel sector. We are now as big as they were at that point in time. So it's interesting to see just how some people are looking into the market as a great opportunity. The final point is value is going to continue to be important. But if you look at, say, Premier Inn or Travelodge, their price point is running away from value. And this is because the budget sector has a number of pressures, and there are some limitations to their product that eventually got them to have to sell beds at a certain price. Of course, they're competitive at some point in time, but the majority of the time, they're moving away from value, and we want to occupy that space. The interesting thing about hostels is that whilst there is some volatility in hotels, because hostels are so competitively priced, they tend to mirror travel patterns across the world. And because we're tapping into a very young population that has the time, the disposition, the energy to travel, both hostels and our business seem to follow the same growth trend as the market. So that's pretty exciting in terms of things to come. The other interesting thing about hostels versus hotels is that we put a lot more sleepers in the same building. So a 50-bed hotel probably becomes a 200-bed hostel, whereas the hotel needs to now get to sell breakfast to 50 people. We're selling breakfast to 200 people. And the ability to have all these people in the building creates an energy that is more conducive to go and spend money, be that in F&B, be that in ancillary revenue. And if you're staying in a hostel, you need a padlock. If you're staying in a hostel, you're sleeping, you're sharing the dorm with someone else, you probably need, I don't know, headphones, not to listen to the other people. There is a natural need for ancillary that we just managed to capture. So very much unlike hotels, there is naturally a propensity to sell 20% more revenue from our guests. And again, because of demographic, there's no great science to these, but the hostels tend to be sold online and have been a much more interesting online proposition for a while, very much because it's attract a younger population and they're more adept to using online tools. And again, that goes on to distribute. This is a big study that was done by a company, Focusrite, so it's not our numbers. This is what a study of the market completed in 2018 came up with. The majority of the hostel businesses sell their business online directly to guests. And on that, I'll give you a quick sample of what the business model is. 40% of our business is sold through groups. Groups have to book in advance, so we know 3 to 6 months in advance what our business on the books is going to be. So we've got a high level of certainty of the opportunity or the risk, and then we can flex our price accordingly. Hotels don't like to do groups as much as we do. That is kind of our bread and butter, and therefore they run a bigger risk of not knowing what their occupancy is going to be further out. So what are we trying to create? We're trying to create a radically new experience of staying in a modern hostel. So it's not hostels as you may have seen them or experienced. This is the real thing. It's a great bed, great linen, great service, great quality, and delivered still at a great price point, on average £20 to stay with us. The product is really easy to bring to maturity because largely what we're doing is acquiring existing platforms and making them better. So there is always a base business that we're only optimizing. With the fastest growing hostel chain just now, a little bit because we're small and every time we put 4 properties we double in size. Our IPO was in 2014 with 1 property. We've got 13 now. That gives you an idea of how fast we're growing. We have funds available. So we did a big fundraising towards the end of the year last year. And it was really interesting because fundraisings, as you know, you have to spend all this money on the broker and you have to... what turned out to happen was that all the existing investors wanted to hold their position. As management team, we wanted to hold our position as well. So we ended up selling 80% of the fundraising to existing institutional shareholders. The final thing is we've got this early mover advantage. For some reason, nobody's paying attention to hostels in the same way that nobody was paying attention to the budget segment in the UK and left it open for these completely new businesses to establish themselves. In terms of the market, Generator is the 470 million business. There was a large element of real estate in that deal. But actually what they did is they got to market very early. The company behind that, Patreon, just was very smart at getting to the market at the right time and ended up making a very good investment. The rest of the companies are not very big. The biggest one is A&O. They've got, I think, 30 properties. We've got 13 now, so they've got 30. They've been in the market, I think, since 1995. And that gives you an idea of just how diverse and fragmented the market is. There are some charities in the mix. The charities, we kind of ignore them because they're a different business model altogether, and they tend to pitch to a different customer market. But chains with more than 11 is the smallest part of the pie, and that gives us some confidence that we can go and just make a number of acquisitions. So in 2018, we had some really good results, and this is the second year where we're posting some really good results, and we think at some point this is going to start accelerating the share price. One of the indicators that is really important to us is the 80% likelihood to stay with us again, because we're trying to create a guest-centric product that is going to have longevity. It may not be under our guidance or under our leadership, but eventually someone will acquire a business that has some real legs and has longevity. Our revenue has grown by 39%. The year before it had gone by 43%, very much in virtue of the growth, and this is a rollout. We keep on growing occupancy in our existing portfolio. I'll give you an idea. Premier Inn's occupation in the UK, occupancy in the UK was somewhere around 72%. We're running at 75.6%, and we're nobody. We have no visibility. It's very difficult to project our product onto the market, but we're doing a good job. The level of occupancy we run at should give our shareholders great reassurance. If we're managing to move average bed rate, we would like to move that to 22 in the next year and a half by being a little bit smarter about our revenue management. Last year alone, we've acquired 3 properties, all self-funded, Barcelona, Brussels, and Vienna, which should give you some confidence that we don't need to do fundraising to acquire properties. We did fundraising, and we've got 11 million probably sitting in the bank to go and expand. But we did that to accelerate and to really energize the business. But we can do some acquisitions as well through our own financial resources. So this is, again, a little picture of where we're going to be in 2019. We'll be generating 1 million sleeps. 1 million sleeps is a pretty chunky number, and we're very happy with that because we're starting to talk to people about a business that has some scale. And the other interesting thing is we've got 35,000 followers online. For our business, that is really important because we're talking directly to the people that stay with us. And just those 35,000 followers alone, if we manage to harvest sufficient business from them, would give us a level of occupancy that would completely take any risk out of the business. In terms of shareholders, these are our institutional shareholders. They, as I said, they're very interested in the business. They're very interested in holding their position. There's always a bit of a fight, and if you're going to do a fundraiser, I want to retain my position. All the directors joined the fundraising in December. We all wanted to make sure that we retained our share of the pie. But what we would like to do, and we've got the liquidity problem always, as is typical of AIM, but what we would like is to get a lot more retail investors interested in our business. If we were to, we've got the 10 million in the bank. That will give us some opportunities. Tomorrow I'm flying out to go and look at a property, and this is a constant. We're involved with a number of properties at the same time, and we'll take an opportunistic view of what is the next step. But if we were to use our funds plus the self-generated funds within the business, we would get to that scale of growth by around 2021. We think we'll get to something close to 40 properties in the next, probably around 2022, if the model continues to expand at the same pace. We've got a lot more to do in terms of optimizing rate. I'm going to run out of time, so I'll just gloss over some of these. But expansion is the easiest way to add value to the business. There's more to be done with optimizing rate and optimizing occupancy. There is always more in that. Occupancy at 80% is optimum. So we still have some headroom in there. We're running at 75%, give or take. And we could improve our distribution channels and pay even less than what we're currently paying for acquiring business. a little bit of a map of where we are now. So the big flags where we are, the smaller flags where we think we should go to next. And then there's multiplying presence in some cities. We've got 2 properties in London, 3 properties in Barcelona. Wherever we go that we see there's more opportunity, we'll keep on expanding on those cities. Maybe this one is a little bit important. I'm nearly there. This is the criteria, and we're pretty dogmatic about sticking with the business model. We know it works. We know it gives us the right returns. These financial indicators, which I'll spare you reading them out for you, are what really energizes the business and releases funds in the future to continue acquiring properties. So really the reason why we're here today is to kind of position the business, make sure that more retail investors know about the business. What we want to do is to expand and increase scale. That then gives us a number of benefits, increasing opportunities to sell the business, because every new city gives you a new contact. And of course, as we achieve scale, we can automate and we can find efficiencies within our payroll. Self-funding, accelerating our ability to self-fund to then go and expand the portfolio is something that we're on the verge of achieving. And we think we'll get to profitability this year. And we think that's an important marker, and it should give some confidence to investors as well. And again, it should accelerate our share price. And that was it. There was a bit of a rush towards the end because the timer was going.
Thanks, Nuno. Thank you very much. Anyone got a question for Nuno, please?
Yeah, 2 questions, very simple. Occupancy rate for mature properties, 2 years plus, and average cost of debt.
So because we're buying operating businesses, what we normally do is we add 10% value in terms of optimizing shoulder periods like January and December. So we know a few things about groups that we can then engender a little bit more occupancy in those months. But typically we're buying operating businesses, so we bring them to 75% very, very quickly. We'd expect that to be within the first year. Rate is the other battle. We need to continue to optimize rate, and that is about being really clever about the pieces of business you really don't want to take, and being a little bit more aggressive about rate in the markets we can. Our debt is pretty small. We've got £18 million debt to HSBC, and then we've got what is considered to be debt as well, which is the long leases. And I can't remember what exactly. Say again?
20 million.
20 million in long leases, which are treated as debt. Effectively, the only debt we've got is the 18 million to HSBC, and it's being diluted by the fact that the fundraising and the continuous growth of the business and the payment of the debt is going down.
What interest are you paying on that debt?
It's 1.4?
2.5, 2.4% plus LIBOR on the debt.
Okay,
Yeah.
thank you.
LIBOR plus.
Any more questions?
In terms of marketing, are you with the usual booking sites like Hostelworld and Booking.com?
Yes. So we would like to sell 50% of our business to groups because there is no commission, or the commission is a markup. So ideally, the ideal business model is 50%. The capacity doesn't always allow us to sell all to groups, but groups is really pretty. You get the revenue in advance, you know what you're going to do. 45% of our business is currently being sold through OTAs, online travel agents like Hostelworld. The real dominants are Booking.com, Expedia, and Agoda. Hostelworld, they didn't invest enough in their technology when Booking.com and Expedia discovered hostels, and they're losing market share. So what we're seeing is that, and it's a shame because they were a very interesting niche business. I think they made a mistake. They should have sold to Expedia a couple of years ago, but they decided to persevere. But they're an important part of our business, 45% of our business. The remainder of the occupancy is sold directly through our website or extended stays.
Thank you.
Another question there, I think. Thank you very much.
Yes, any plans to move out of Europe? Because I think your business will be brilliant in somewhere like New York.
We take an opportunistic view of what is the next best deal, and what we won't do is rush into anything that doesn't contribute to those indicators. So Europe is really easy. There's a lot of low-hanging fruit that we can just go and buy. Vienna, for instance, we didn't pay anything for the business. The landlord came to us and saw that the covenant would be improved by coming into business with us. New York, actually, there's always a property that comes a knocking. They've seen us. They think we could create some differentiation. And some of those markets are too expensive. New York, Berlin, Amsterdam, they're just too expensive. I think we need to have presence in there, but it's going to come at a price. So it's balancing out locations where we can really energize the business in terms of EBITDA with other locations that energize brand equity without damaging EBITDA. So the balance is there somewhere.
Thank you very much, Nuno.